bring in Joseph Bonner, Senior Securities Analyst, Technology and Media Communications over at Argus Research. Joseph, thank you so much for joining us this morning. I know we're about to do a deep dive into Palantir. They had results that beat expectations recently, but you've downgraded this stock. So take us through what's behind your view and why you've downgraded it to, I see you've downgraded it to a hold now.
Sure. Good morning, Diane. Let's start with the quarter. They had a great third quarter. They increased they reaccelerated their government, U.S. government revenue 40%. It was 10% in 3Q23. That's their core market. Their kind of expansion market is the U.S. commercial market. Was up 54% in the quarter. Expanded margins, $1 billion in trailing 12 months cash flow. So, doubling that. So they had a great third quarter. My issue with Palantir is that the share price has tripled this year, more than tripled. So what that means is that Palantir is going to have to grow very fast for quite a while to support that kind of valuation. When you think about, a high-flying tech stock, we've seen this kind of story a lot of times before. All they have to do is miss a quarter or miss the market's expectation of a quarter, and the stock price gets hit. But putting that aside for the moment, let's think about what they do. Palantir makes software to solve very complex data problems. So that's worked great in the defense and intelligence business that they've had with the government. They're now expanding into the commercial market in the U.S. And the question is, how big of a market is there for this kind of software out there? A lot of other companies that solve a lot of enterprise business process problems. Microsoft, Oracle, SAP, ServiceNow, and maybe more mundane kind of issues. And the question is, what is really the market for this kind of software that solves these complex problems? And Palantir is going to have to kind of prove that there's a consistent market out there for this. So again, they have to support that just really run up in valuation.
So is part of your concern that so a big part of their business is relying on the government, but they've been extending into the commercial business in a greater way. Government business still accounts for more than 50% of its business. Do you have some concern, especially when you think about, there will be a transition in the government, that they could lose some market share there?
Well, they've been doing the government business for 20 years. So the concern is really about consistency. Governments, the government contracts come and go, and working with the government is not always a very consistent practice. You win a contract sometimes, you may not others. It's kind of a hit or miss business.
And then how significant, in your view, is its commercial growth to, just overall growth? We saw that revenue grew across the board 30% for all its metrics. But how important is the commercial business to achieving the valuation at the level that it is now and increasing its valuation?
Sure. The commercial growth market is critical. It's critical to supporting that valuation. Again, they had a great quarter. They're doing fine. The question is, how big of a market is there out there? And you think about, U.S. commercial was 54%. You think about, their international markets outside the U.S., that grew about mid-single digits. Maybe they just haven't tried to exploit that yet. But those international markets will need to come online at some point. But the real question is how big is the commercial market for this type of software?
Is their premium justified though by its positioning?
Well, that's the question. I mean, I wouldn't have downgraded it if I thought it was justified. Let me put it that way.
Okay, all right. Well, what would it take, in your view, for you to, upgrade it back to a buy rating?
Certainly, consistent, rapid growth. Two quarters, 3 quarters in the future. That's what I'm looking at. Is consistent growth for them.
Who are you comparing it to, especially when you think about its P/E ratio, and in terms of like the valuation that you're paying attention to, Palantir versus others in this space, to reach the premium that you think kind of justifies the level where it is and where it seems to be, in others' view, headed?
As I mentioned, a lot of their peers, companies like ServiceNow, other enterprise software companies like ServiceNow, Oracle, SAP, Microsoft, companies that have been in this business for many years. They are bigger for sure. A lot of them are bigger. Some of them are smaller. But really, their peer group is enterprise software.
Right. And then what would you think, in your mind, are the challenges or key challenges that Palantir faces in terms of diversifying its client base? Obviously, we've talked about how the government defense sector has been a big part of its client base, but diversifying even its commercial base.
Again, it's this question of are there enough complex problems out there in the commercial market for them to address? I mean, that's really the question. Versus, just your online transaction processing, for example. Kind of your bread and butter enterprise software. Are there enough business intelligence problems that you need this kind of software for, that you can't just go to a Microsoft Azure or an SAP to deal with?
And then how dependent then in your mind is Palantir on its AI applications, its AI-powered applications for continued growth? And, kind of how does it differentiate itself from its competitors, as you mentioned, like Microsoft Azure, et cetera?
Again, AI is critical to their growth. I think they've been very clear about that. These new AI applications, and again, they're a little differentiated from some of the hyperscalers like Microsoft. They're focused not on building a large language model, which a lot of companies are spending billions on. They're focused on the layer above large language models, kind of operationalizing AI, for example. I think that's a good strategy. I think that's a very good strategy for them. There's a lot of models out there. They don't need to build their own model. So that really is I think that's a good strategy for Palantir to follow. They may be dependent. It could make them dependent on others' models, but it's certainly better than spending their cash on their own model.
Who do you like better than Palantir right now, given Palantir is, like, to your point, yes, the stock has shot up significantly this year. So what do you like better?
Well, there are companies that are more trading in line with their valuation. A company like ServiceNow is another great company, and it's in the enterprise software space. Great leaders, great management, and that would be another one of my picks.
And then what are the differentiators for ServiceNow, in your mind, that makes it a better pick than Palantir right now?
Again, they have the AI layer, and again, they've been in this business for 10 years already. so they have much more of a track record in terms of their market, in terms of addressing the market.
And then what market events are you paying attention that could change directions for Palantir in your mind?
Well, again, as I said, that they need to prove that they can grow very fast in this market for quite a while. And that 54% growth in the third quarter was great. Can they sustain that? I just don't know.
All right. All right. We will have to leave it there then. Joseph Bonner, Senior Securities Analyst, Technology, Media, Communications, Argus Research, with views on Palantir. Stock indicating that it will open lower today. Thank you so much, Joseph. Have a great weekend.
Welcome.